All right, so I hope everybody is having a wonderful day. Today we are going to talk about this new bill that was signed about 2 weeks ago by the governor of Florida, Ron DeSantis. And, essentially what the bill was looking to solve is the fact that the cost of living has simply been going through the roof. And there are a ton of people who serve our community, and they have a truly massive impact on everything that goes on in our local communities, everywhere in Florida. But unfortunately, because of the home prices rising, which is a curse and a blessing at the same time if you already own, a lot of these people have to look far outside the geographic range that they actually work in. So at the end of the year, the government, in Florida had a surplus on their budget and allocated $100 million in the form of, up to $25,000, right, as a second mortgage in order to help people in, 600 official job titles in 50 different industries. And it is a very, very flexible program. Now, the reason why I am so passionate about what just occurred in this new bill, is really because my mother is from Poland. She escaped communism. She came here when she was 18. My father is from Honduras. He came here from at the age of 23 and didn't know any English. So, if it weren't for my parents coming to this country, I would have nothing, absolutely nothing. But they came here, and now I have the opportunity to, give back and serve my community. So I'm very, very passionate about doing that, and very passionate about educating people on the benefits that are out there for them. And I'm gonna tell you the truth, guys. Okay, I'm not gonna make any money doing these loans. That's the truth. I'm not gonna make any money doing these loans. You're actually not gonna have many loan officers promoting this program for that reason. Okay, because essentially only the branch is going to make money on this deal. They don't let you make money with these down payment assistance loans. Okay, but my full intention is to just serve the community at the highest level possible, and just to take care of as many people that I possibly can. Because the truth is, guys, the market is shifting, and a lot of realtors have been struggling, income wise, deal wise. This product is so powerful because once we go through the occupations, I guarantee everyone on this call is going to know somebody that qualifies. So it's going to allow you to be a better resource for those in your community. Okay. And on top of that, ladies and gentlemen, this is a article that came out about 2 weeks ago from Scotsman Guide. Basically, there's a survey of every mortgage bank in America, and believe it or not, average net profit on a loan was only $223 last quarter, when at the last quarter 2021 the average profit per deal on a loan was over $1,000. So lenders' net profit, because rates have gone up 3%, is down 75%. So there's not going to be a lot of loan officers that are going to want to facilitate this program, because they're not going to make any money and because their business is already down. However, I am fully committed to serving as many people through this program as possible. All I ask is that anybody that can qualify for this program, if you are one of the qualified jobs, if you have a full-time job in one of those professions, just send me one referral a year. Because if you send me one referral a year, that's more than enough. It's gonna keep me, being able to put food on the table, and it's gonna achieve the objective of you guys being able to get this incredible program when a lot of loan officers are really not gonna want to be promoting it. Okay, so this is actually the article from the Scotsman Guide of Lender Net Profit. Yeah. So without further ado, ladies and gentlemen, let's go ahead and get right into what is the big deal with this whole down payment assistance program. Okay. So in order to find out what the big deal is. We simply have to start with, what is this? What is this program? Okay, so I'm going to get my drawing tool out, go to the spotlight. So this is simply a 5% second mortgage. Okay, so let's say your loan amount is 500,000, right? That's going to cap you out at the max 25,000 in down payment and closing cost assistance. If your loan amount exceeds that, well, you can still get the 25,000, but it just cannot surpass that quantity. And if you ever want to figure out, any kind of scenario, it's really simple. Just put in the loan amount, hit the multiplication sign, and do 0.05, and you'll be able to find out how much it's going to provide. Now, what you have to understand about this is that it's not forgivable. Okay, so when you sell the home, it's paid back. When you refinance, you got to pay it back, right? So we might, some of the pros and cons to this is it might be better, since there's going to be a really good refinance opportunity in about a year or so. Once we're in a recession, then interest rates come down. Historically, that's just what happens. Every time rates go up, inflation gets out of control, then the government says, hey, listen, we got to tackle inflation. They raise interest rates, and then before you know it, we're in a recession, and then interest rates have to come down. So it might be better to utilize this program, either in a year when that occurs, or utilize this program now, and then I can definitely help you understand your buying options for a second home after this purchase. At least you can get into the game with this purchase itself, and you can hold on to it. All right, now where I want to go now is what kind of jobs actually qualify for this. Okay, and you guys are going to be absolutely blown away. So the list is extensive. We got correctional officers, correctional probation, juvenile detention, firefighters, paramedics, EMT, 911, public safety communicators. We got classroom teachers. By the way, this is absolutely mind-blowing. So you do not just have to be a teacher for public schools. Your certification, be a private school teacher, because to be a teacher in Florida, you have to get through the state. So I guarantee you went to school, talked to, hey, look, did you know I can get you 25,000? Brilliant opportunity right there. Okay, registered nurses, 1/10 of the Florida employment population is in the medical space, and there's so many registered nurses down here. Now check this out, CNA, if you're a certified nurse assistant or home health aide, I mean, we all know several people who are in that occupation. Okay. All right, we got psychiatrists, we got anesthesiologists, assistants, we got physician assistants, anesthesiologists, acupuncture, right? Chiropractic physicians, let your chiropractor know. Osteopathic physicians, let's see here. All dentists, pharmacists, naturopathic physicians. I don't even know what that job entails, but there's so many jobs that qualify. You have speech language audiologists, therapists, respiratory therapists. Now check this out, an athletic trainer. We all know an athletic trainer. Just make sure you're registered through Florida. Electrologist, massage therapist. I mean, come on, you all have some friends that are massage therapists. Now we got phlebotomy, licensed medical physicist, anyone that deals with x-rays, opticians. So really the government did a really great job of really thinking of, look, what are the positions where people can make good money, enough to qualify, but they could definitely benefit from some assistance. And these are really the occupations where the government probably looked at internal Florida migration data, and they were like, wow, like all these jobs are moving away, like how can we protect these people long term? Okay, marriage and family therapists, veterinarians. Now check this out, active military personnel or veterans. So anyone that was a veteran. Now, what's really cool about this is to qualify for a VA loan, you have to have been active duty for 24 months. But in these guidelines, if you served in the military, even if you don't qualify for a VA loan, if you're a veteran, you can still get it, and you don't have to work for the state of Florida. So even if you were less than 24 months, so even if you wouldn't qualify for a VA loan, this program would still designate you as a veteran. So you can't do the VA loan, but you can do conventional or FHA. So anybody you know, if they were honorably discharged, okay? And you do not have to be a first-time home buyer if you were in the military. That is such a beautiful advantage right there. Okay. Now let's talk about income limits, because this is honestly the reason why this program is so much better than all the other down payment assistance programs out there. If you look at all the other DPAs out there, they weren't very beneficial, and that's why a lot of companies weren't doing them. Because, for example, in Palm Beach County, it's 80% area median income, which means you have to make less than $54,000. Okay, but check this out. All right, Brevard County, 121. For all my Cocoa Beach people out there, you got Broward County, 136. That's the annual income that it cannot exceed. Okay, we got Palm Beach at 138. We got Miami-Dade at 146. These are very realistic, very, very flexible restrictions, okay? Now, what excites me even more, all right, let's take a look at right here, okay? You can see the loan limit. So this is for FHA, all right? And the maximum loan limit for FHA happens to be 460 in Palm Beach County. So the maximum loan limit for this program is the same exact thing as the regular FHA maximum loan limit. Same thing for conventional, okay? The conventional Palm Beach County loan limit is 647,200. Same thing for this product, all right? And this also applies to VA. For a regular VA loan, there's actually no maximum loan limit, all right? But for this program, if you're getting that 25,000, you do have to stick to that maximum conventional loan limit of 647,200 for VA loans as well, okay? Now, what we're going to get into, because really what I did for you guys is I went through all 38 pages of these underwriting guidelines, and I highlighted a few things just to keep it short that you guys really need to know to have a deep level of understanding of this product, okay? So we're going to go ahead and scroll to page 18 over here. That's where the juicy stuff really starts, okay? All right, so check this out. The only kind of documentation that we need, to verify is a verification of employment, right? So we'll go ahead and order that for the borrower, and then a copy of the state Florida license or certification, okay? Anyone that got certified through Florida, you probably have that already somewhere online on your computer, so very, very easy. Then we need the executed Florida Hometown Hero Loan Program attestation, all right? That's something that we will send the borrower, so you guys don't have to worry about that. We're gonna take care of all that for you. Now, eligible second mortgage program, it's important to understand that you cannot combine this with an additional down payment assistance program, okay? So that might be obvious for people that have experience with down payment assistance, but for those who don't, you can only utilize this one and not another one, okay? Now, in regard to pricing and rate, we as cross country, we're not going to set the rate. The rate is actually set by it's called TBA, right, which is the bond alternative. That's the part of the government that's going to facilitate this down payment assistance program. Now, the rates are actually very close to par, very close to what anyone else would pay not using this. So they do change it every day, but this is the most up-to-date one. For FHA, you're at about 5 1/8, okay, for the interest rate. For Fannie Mae, you're at 5.625 if you're below the area median income, okay? If you're over the 80% area median income, okay, but below that 138, the maximum area median income, then it's a 6% rate. And the truth is right now for regular conventional loans, they're right around 5.5, 5.75, but in a few weeks they're going to be 6 as well. So this program is very competitively priced. Okay, very competitively priced. Now, this is where all the juicy stuff starts that I know you guys really want to understand. So what's beautiful about this product is there's no loan level price adjustment. Okay, no LLPA. Now with other down payment assistance programs, the interest rate used to be jacked up because they would hit you for a loan level price adjustment for added risk for using down payment assistance. That is not the case for this program. Now, loan purpose obviously has to be purchases only. All right, so refinances are not eligible. For the combined loan to value, if you're using a VA loan, which is 100% financing, then technically with the 5% second mortgage, it'd be a 105 loan to value. You can do conventional, first time home buyer, 3% down, that'd be a 97% loan to value. Be a good credit, conventional first time home buyer. Obviously, FHA LTV is 96.5 because that's a 3.5% down payment. Okay. Now, something beautiful about this is that for other down payment assistance programs, when you're using an FHA loan, the down payment assistance cannot go toward the borrower's minimum 3.5% contribution. It can only do that for conventional. For this one, the down payment assistance can actually go toward the minimum 3.5% contribution. Same for conventional. So it makes the total out of pocket dramatically lower for the borrower. Now, very flexible on credit. Minimum FICO is 640. Very flexible. Very flexible. If you're doing manufactured housing, you do need a 680 for that. Now, in terms of debt to income ratio, if you're below a 680, then the debt to income ratio is going to go up to 45%. Okay. If you are at 680 or above, that's a 50% debt to income ratio, and that's for FHA, VA, and as you can see here, that's also the case with conventional. Now, this product is available for Fannie Mae and Freddie Mac. Those are the two entities that pretty much control all conventional loans in the country. So 680 higher, 50% DTI, that is significantly more purchase power than any other down payment assistance program allowed for. Most down payment assistance programs go to a 43% DTI. The flexible ones go to 45. This one goes all the way up to 50, okay? So very powerful advantages there. Now, the non-purchasing spouse is not required to be a first-time home buyer. Okay, so if you're a teacher, veterinarian, police officer, firefighter, any, therapist, whatever, right? If your spouse owns a bunch of homes, but you currently don't, right? You're not on the title, then you're good. You are absolutely good to go. You don't have to worry about the fact that your spouse might not be a first-time home buyer. Also, what's really beautiful is that co-signers are allowed, okay? With other down payment assistance programs, you cannot have a non-occupant co-borrower, all right? So this is gonna allow so many more people to qualify and to actually, be heard in the home buying community. Now, is a co-signer's income considered? Yes, it has to be considered because the co-signer's credit is also gonna be considered. So the co-signer's income is going to be considered, all right, in the debt to income ratio and in the income limitations. All right. If it's a non-purchasing spouse, which means they're not on the loan, right, then their income is not considered. So if it's on the 1003, the mortgage application, then the income is going to be considered. If it's not, then it's not going to be considered. Okay. All right. Now, here's what's really interesting. Okay. In regard to occupancy, when you're making offers out there, you can do a 60-day lease back because the buyer and the borrower, they just have to occupy the property within 60 days. So you can still stick to that rule, okay? Minimum borrow contribution, as I was saying, this is one of the big benefits of this program because other down payment assistance programs for FHA do not allow you to use the down payment assistance toward that 3.5% minimum contribution, okay? They make you bring your own 3.5%, then you can use it on top of that or for closing costs. This new program is so much less restricted. Now, cash back to the buyer. Okay, so for example, let's say you qualify for the $25,000, right? But you only need, right, $24,000 for your closing costs and you got the down payment covered on your own or what have you. If you have a surplus, right? If you have like $1,000 surplus, that amount can be used as a principal reduction. So you can bring the loan amount down by $1,000 bucks. It cannot exceed that, right? But that is what you can go up to. So very interesting, because with other down payment assistance programs, if you had a surplus, you just had to, lower the loan amount or not use it. This you can really use it. Okay. You can also get a gift. That is absolutely fine. So you can use the down payment assistance and get a gift. You literally don't have to bring anything, like hypothetically, to the table if you can get a gift. Okay. Also, the borrower is not required to utilize their assets. So if the borrower doesn't want to provide their bank statements because they're using this program and they're getting a gift for the rest of the money, we don't need their bank statements. That is absolutely incredible. With other down payment assistance programs, they need bank statements. They want to make sure that the borrower doesn't have too much money, right? Not the case with this program. So, homeowners insurance deductible, when the client is getting their homeowners insurance, you don't have to worry about any additional overlays, unlike other down payment assistance programs. This one just goes by agency guidelines. Okay, so whatever FHA says, whatever Fannie Mae or Freddie Mac say, that is what you can do. Okay. Now, the state of Florida defines a first-time home buyer as anybody that has not had their name on the deed of a primary residence in 3 years. Okay, so that is the first-time home buyer definition that this new bill is going based off of. But as I mentioned, if you're a veteran or active duty military personnel, you are excluded from the first-time home buyer requirement. So if you own a home right now and you're a veteran, you can go ahead and buy another one. It is such a beautiful thing. Yeah. Now, ownership interest in real property. Okay, what that means is that if you're not a veteran or active military personnel, you can't just have, a bunch of investment properties, have been renting for 3 years, and then, use this money to go buy another home, right? This has to be the only home that you're going to actually have your deed on, okay? If they're in an LLC, that's fine, but we're talking personal property here, okay? Now, what's really interesting, because I personally love the 2 to 4 unit multifamily space, right? So like a duplex, triplex, or quad. You can do that with FHA if you work for the state of Florida, or just qualify based on the job requirements. You can buy a 2 to 4 unit property. You are not restricted to buying a single family property. Literally, this is so different than any other down payment assistance program where they say, look, only single family properties, condos are even really tough, right? This has so many less restrictions, okay? Now, condos are possible. US Bank is the servicer for this program. Every single state that is down payment assistance has one servicer, So US Bank has their own condo overlays, but I've looked into them and they are very, very flexible. Okay, so you do not have to worry about not being able to buy a condo. Now, here's where you're going to save a little bit of money, okay? With this program, okay, the first and second mortgage notes are exempt from certain fees, okay? So the doc stamps and intangible tax. Now, what that really means is that not only are you getting that $25,000, but you're also going to get an additional, between $1,000 to $3,000 off, because you don't have to pay for the doc stamps and intangible tax, which is amazing because everybody else has to. Okay, so you're really going to save between like $26,000 to $28,000 when you use this program. Also, you can use a power of attorney, which is amazing. If you want to buy the home, but you have to leave the country, or you just can't be present at closing, you can still take advantage of using power of attorney. Now, wrapping it up really in regard to the underwriting guidelines is there are some fees. So you still have your tax service fee that's paid to CoreLogic. That's only $84. You have a $225 compliance fee paid to eHousing at closing. Okay, you have a $400 funding fee that is paid at closing as well. None of these items are paid out of pocket prior to closing. Okay. Now, what I was talking about, loan officers not making any money on this, is that when the loan is purchased in the secondary market, right, after the deal has closed, the loan gets purchased by investors in the secondary market, 60 days after closing, within 60 days, the servicer gives 2.5% to the mortgage company, of which the mortgage company is going to take, 1.5%, and they're going to leave the branch with 1%. And that is what the branch has. They're going to leave the branch 1% to cover, employee expenses and things of that nature. So literally, like, a loan officer like me would make 1/5 using this deal, literally 1/5 compared to if I was helping a client without this program. But this program just excites me that so many people can benefit from it that I'm going to be doing it left and right. All right, I'm not worried about that. Realtor commission. So the transaction fee has to be paid by the borrower. All right, it cannot exceed $400, and the $25,000 does not cover the realtor commission fee, because if you look right here, the realtor commission is not a standard buyer cost in the state of Florida according to these guidelines. Interpret that how you want, but I'm sure $400 is no big deal. Now, one quick thing I really want to touch on that's really important to understand is, I know some other loan officers I've heard out there say, hey, look, if you have a non-occupant co-borrower, okay, then their income is not counted in the debt to income ratio and in the qualifying income limitation. But that's not true, okay? The truth is, if you are a co-signer and you are not residing in the home, okay, not residing in the home, but a co-signer, that's a non-occupant co-borrower, then yes, that income is included. If you look at this chart, okay, that's for FHA. But then if you scroll down to conventional, it is the same exact thing. All right, co-signer, do they reside in the home? No. Include in qualifying income? Yes, you absolutely have to. Okay. Now, just a few more, tidbits of information in regard to the 25,000. Okay, so I really want to make this, as clear as possible. If someone asks you, hey, what is my monthly payment on this $25,000? You can tell them your monthly payment is nothing, okay? Because this is a non-amortizing 30-year deferred second mortgage. So you do not make any principal or interest payments. The interest rate is 0. You just simply pay it back when you sell the home or refinance, or if there's a change in the deed, okay? This is a really good little, one pager that I'm going to email out to everybody on the call. So I'm going to email the recording to everybody on the call, and then I'm going to also email this little one pager. It's really cool because what this one pager includes is the debt to income ratio, credit score, and just a few other, really solid tidbits of information that really summarize this product, okay, really well. So we literally just went through everything you need to know in this 38-page PDF that, I know nobody really has the time to read. And I know we really did hit on a lot of things, but I wanted to go ahead and open this up for a Q&A. Let's see, if anybody has any questions, you can go ahead and just ask a question in the chat box, or you can go ahead and put it in the question box as well. I'll be able to monitor both.
I have a question, Chris.
Yeah, go ahead, Sylvie.
Okay, so you said that there is no monthly payment, but yet there is interest on it. So how does that work?
So there's no monthly payment. That's a great question, Sylvie, on the second mortgage. So on the $25,000.
But you were saying that the interest on that, oh, wait a minute. So the interest that you were talking about would be on the first mortgage of that same transaction?
Yes, so you're always going to have your regular mortgage payment, the big loan amount, right, which is the difference between the down payment and the price that you're getting the home for. The first mortgage, that's the big loan amount. You're always going to have to make your regular principal and interest payments on that, and the interest rates for that are right here. So FHA 5.125 Fannie Mae, 5.625 if you're below 80% median income. If you're over that, then about 6%. That's on the first mortgage. But on the second mortgage, there's no payments that you make on that. No payments on the 25,000.
So there is no interest that accumulates on that 25,000.
That is correct.
Paying it 30 years later and still, well, okay, wait a minute. When your first mortgage lapses, because it's 30 years now, do you have to pay that second mortgage?
No, it's due in full. It's non-forgivable, and I'll show you right here.
Due in full when? If you don't sell the house for 50 years, it's not due for 50 years? It's not due till you sell?
Well, you know, what it says here is that once your mortgage is paid off, then it's also due in full, right? So the thing is, though, the client has 30 years to figure out what they're going to do. And, you know, statistically, people only stay in their home between 5 to 7 years. And that amount of years has actually been decreasing over the past few years. So almost nobody's going to really be in that situation.
Okay.
Sylvie,
But
Chris,
go ahead.
it's Dave.
Hey, Dave.
Hey, so it's non-forgivable, but in 30 years, it's called at that time. At that point, you can refinance it or do something. It's not like they're charging you a penalty or anything. Is that my understanding?
Exactly. So even when you refinance, you know, in 30 years, you're going to have a lot of equity in your property, and you can just pay it off through the refinance. It's called a cash out refinance, and you would just do, you know, a debt consolidation cash out refinance,
Or a HELOC.
Or a HELOC. Yeah, you have several options. And you know what actually DeSantis was saying in the when I was watching the whole, you know, press conference on this, is they understand that home prices for the next few years, right, with this ridiculously low inventory and a lot of people moving here from up north, there's a really good chance that they're gonna continue to, you know, get more and more out of control for so many of our hometown heroes. So the goal is to lock in now, even though inflation is gonna keep increasing dramatically, because honestly, you know, this $25,000 second mortgage here, if you think about how much money that's going to save the client over that 30-year period, that 25,000 is going to allow the buyer to build hundreds of thousands, if not, you know, close to $1 million in equity, you know, by that time, maybe even more. Great question.
Quick question to follow up from that. Seller credits.
Yep.
Is it the same guidelines as Fannie, Freddie, FHA?
Same guidelines. Yep. So it's up to 6% for FHA, right, and then 3% for conventional.
Gift funds? Same.
What was that?
Gift funds?
Gift funds are absolutely allowable. Yes.
I don't see any downside other than explaining this in a long dissertation. Thanks, Chris. I want to catch up with you later about it. I'm going to press mute again.
My pleasure, David. Thank you. You're a busy guy. All right, buddy. All right. Go ahead.
Is that for me?
Anybody? Yeah, I think you asked the question already, Sylvie. Let's go ahead and open it up to somebody else. Okay. Anybody else? Can you go ahead and, I can't really hear you too well. Can you go ahead and type your question into the chat box or the question box? Okay, so the question is, my buyer's mom put her on a deed for a home that has no mortgage 2 years ago. Would she qualify? Also, she is support personnel for corrections, but does not have a certificate. Well, yeah, support personnel. I'll send everybody all the jobs that qualify. If you're a support personnel or assistant to any of these occupations in the bullet notes, then yeah, most likely. Okay. But to answer your first question, my buyer's mom put her on a deed for a home that has no mortgage 2 years ago. Would she qualify? That is a great question. So the home is free and clear. all right, but she's on the deed. Do you know right now in her primary residence if she, owns that, or if that's just an investment property that she's on the deed for? Because if she's on the deed for her primary, then she would not qualify. Okay, but if it's a deed of a property that she does not reside in, then she would still qualify at that time. All right, now Sylvie, you can go ahead and ask your question.
So what did you say about real estate commission? I missed it.
So just the transaction fee has to be paid, by the buyer out of pocket. It's not going to be included in that 25,000. But obviously, seller pays real estate commissions.
But the commission gets paid not by the buyer, but by the seller anyway.
Yeah, exactly. Yeah.
Oh, okay. And there is no, it's just a regular transaction, if usually is 6%. So it's the regular seller 6%. Okay.
That is correct.
Yeah.
That is correct.
Okay, you're gonna be one busy man.
All right. Let's see who has a question out there. Hold on, give me a sec. All right, let's see. Looks like Tangi, you got a question? All right, and anybody else can just go ahead, ask me a question. Let's see. All right. Hey, Rayvon, how you doing? Okay. Let's see here. Let me open this up a bit. Yep, okay, yes. Let's see, okay. Let's see. How do we get this for our buyers and length of approval? It's very simple. You just send your buyer to me. We pre-approve them with it the same way we would anyone else, okay? Will you be sending out an email of the highlights? Absolutely. I'm going to be sending out an email with the recording, the jobs that qualify, income limits, and a one pager with the most important details of this product. All right, my son is a vet tech, 24 years old. When he is ready, we can help him. Absolutely, you 100% can. Okay, is this good for primaries and secondaries? Primary residences only, cannot be a vacation home. Okay, if they want the hometown heroes to stay in the community that they're serving. Can you email a PDF at the end? Absolutely. Okay. Can you have a primary in a different state that's been rented out now for 2 years and qualify? If you're a veteran, yes, but not if you are not a veteran, because that has to be a first-time home buyer. Okay. Does the buyer have to apply separately outside their mortgage? Nope. Great question. It's all processed in-house. Will you be sending a list of various professions? Absolutely. Okay. My buyer's mom put her on a deed for a home that has no mortgages 2 years ago. All right, I think I answered that question already. If it's a primary that she's in, then no, she wouldn't qualify. But if it's not a primary, then she would. Okay, it's not her primary. All right, perfect. We got a deal. All right. So this can be used to purchase a duplex for a first-time home buyer. Yes, that's true. Where the buyer can live in one side and generate income on the other. Yes, absolutely true. 100%. I'm very excited about that. Yeah, I have a customer who has their license for one of the eligible occupations, but is not currently working in that occupation. No, you need to be working in that occupation. Great question. And you need to be full-time. Great stuff. All right, let's see. Cosigner doesn't have to work in one of those industries. Correct, the cosigner does not have to work in one of those industries. Great question. Is a realtor a hometown hero? In my heart, yes, but based on these guidelines, no. All right. And Diana, let me know if I answered your question. I just went through everything in the question box. Okay, perfect. Perfect. All right, well, look, ladies and gentlemen, if you have any other questions on this program, please let me know. I am super passionate about helping our community, and I'm going to be, one of the main loan officers, for this program. So please let me know. I'd love the opportunity to keep serving our community. Everyone that qualifies for this program does so much for us that really goes unnoticed. So very grateful to have that opportunity, and I hope you guys have an amazing day. 561-801-0260. Molina out. See you soon.
Thank you, Chris.
My pleasure. My pleasure.
Very nice. Thank you.